Good day, guys. This is trading arbitrage opportunities with Calvin Potts. Uh, Welcome to episode 7. The time is 2 a.m. 44, which is like 45 minutes to 3 a.m. in the morning. This is another video. We were talking about the market sentiment telling us to buy the pound Singapore dollar, and I talked about my expectations of dropping all the way down to this blue trend line, and I said these are two touches, and the third touch normally drops below the the trend line. It's something like a market manipulation. We stop as many people out before we push the market higher. What the market makers do is that they don't trade with their money. They trade with money from the retail traders. So they want to stop out the people who are trying to trade the third touch on this blue trend line. So what they do is that they want to wick. Uh, let's say at this moment I'm buying this yellow candle. So what happens is that I'll be holding with my stop loss below this level. Let's say this is my stop loss. I'm holding a long position from here upwards. So what will happen is that this market, maybe this is just in the morning, it's just a week like this one. The actual direction of the market is downwards. Let me show you with this candle. With this candle, you can see that this candle started by moving higher, but the actual direction is not bullish. The market closed below this blue trend line that we had long time ago. This is the daily time frame. So for those who are going to be having a stop loss here and entering the market for a long position, they will normally go to sleep, and when they wake up, the market will have stopped them out. So here we have a trend line. As you can see, this guy is actually landing on this trend line. This trend line is a weekly time frame trend line. This one is the daily. Let me show you. Let me show you. So this whole thing is on the weekly time frame. This gray line. So it's from this is a weekly time frame trend line, and these small ones, these secondary trend lines are the daily time frame trend lines. So what I believe will happen is that the market will stop out these guys and land on the weekly time frame trend line from the daily time frame trend line, which is a secondary trend line. Normally, when you draw a smaller trend line inside of a larger trend line, the smaller trend line that is within uh, this whole channel is called a secondary trend line. So what I'm expecting is that the market should, according to those who studied Wyckoff schematics, they know that in a Wyckoff schematic, before we take off, uh, we need to wick. The story of Wyckoff is that we need to take out those who entered the market here. Let's say I was holding the market long, it came back, but it didn't stop me out. So we expect the market makers to collect all of the money, to collect all of the money that is down here, stop those people out first, those who entered the market first. From here, we need to stop them out, all of them, before the market takes off out of this secondary channel, this daily time frame channel. So that's why I was expecting an expansion. This is a compression. What happens within these secondary trend lines is a compression. And what comes out of the what comes out of the Wyckoff schematic is an expansion. Anything that happens that gets out of here is an expansion because a compression is where the market does not want to move as much as it normally does. And an expansion is when the market creates something like this. This is an expansion. When the market gets out of this compression, it expands. So normally for the market to give us a second rally from the first, from the base, a second rally from the base, we are expecting the market to break out of this secondary channel, which is a wick out of it. It might wick uh, this weekly trend line, but I don't really believe in that. I don't think it will because I don't think it will. It might not, because the market sentiment, the economic outlook between these two currencies. I just told you that the SGD is not ready. The SGD, the Singapore dollar, is not ready to be sold. So normally before it gets sold, it has to go bullish before it goes bearish. So that's normally what I'm expecting the SGD to. That's why I'm expecting the SGD to push me a little bit down here. Even the pound is a little bit hesitant when it comes to taking off. Nonetheless, I'm expecting the pound to get us this week below this level so that we can take off. This is all price action, but before we expect anything from this price action, we need to look at these separate currencies as individuals, and then we can find which currency to buy, which currency to sell, and after that, we can then know how to match those currencies. We can come to a conclusion of saying we can buy this currency and sell. At this moment, I was supposed to have the dollar here, but because of the negative carry, the negative swap, I had to choose the SGD, even though it has a larger a larger spread, but that's not that big of a problem. So I'm expecting a land on the trend line, which is a third touch from the weekly time frame. Let me show you the weekly time frame. The weekly time frame, first touch, second is here, and this third. So I was expecting a touch or a wick. Doesn't matter what it is. I'll be buying the market with a buy stop, which is, let's say we get a wick that is moving lower. I'll be having a buy stop up here, and when the market comes back, it'll tap me in if it does that, but it doesn't matter. Even if it touches it, I'll be buying it. I'll be buying it with the first position, and then if it goes lower, I will have a second buy stop so that when it moves higher, it can collect me. This time, I don't want to exceed the 10-minute mark. As soon as I get to the 10 minute, I'll be saying goodbye, guys. Thank you guys for watching this price action, this whack off schematic, and we're looking forward to holding this long position between the pound and the Singapore dollar. And this is episode 7. I'll be seeing you guys on the 8th episode. Cheers, guys.